Crypto crew, the entire market is sitting inside a pressure cooker right now. Bitcoin itself boxed in between two massive liquidity walls. Ethereum is starting to tighten up and coil. Maybe a volatility squeeze on either side. And altcoins, well, they're quietly separating into winners and losers. As I speak right now, the next big move itself is being built right now. And most traders, they're not going to be prepared for it until it's too late. The question isn't if something big is coming, it's which side is going to get hit first. Welcome back, Crypto Crew. It is your boy Tom here, bringing you the hottest in Bitcoin and crypto action. Make sure you give us a like. Make sure you hit subscribe if you have not already. And make sure you come on over to X and follow us on X, where we talk about Bitcoin, crypto all day, every day, because we are cryptomaniacs. All right, let's get right into it. You know, I had two ideas for like talking to you guys today. And I want to actually just bring this up as well, all right? Because we got some of the biggest players in crypto making moves right now that if you're not cognizant of, it's going to catch you off guard and it'll be too late. So we're going to bring that up in today's video. So today I was actually going to open with that instead of what I just said, but I felt that it's important, Rick. We're still within those those two massive liquidity walls. So we got the ghost in the machine that's basically haunting us still, of course, because we got to get through the top in order for this to actually get out of our way. It's going to be a while before that happens. But Bitcoin is coiling, Ethereum is basically tightening too, and as I said, all coins are divided into winners and laggards right now. Now, behind the scenes, we got some posts that I'm going to alert you to. We got stablecoin reserves that are exploding. So we got long-term holders that are quietly selling, right? That's not good, right? And we got whales basically positioning for a major move, all within this. Now, here's the thing. I'm going to bring some points up today that are quite different. I'm going to kind of like break away from what conventional wisdom is when we talk about some charts I'm going to show you. But right now, let's just get into what's going on short term. Then we can get into that in a second. We got to pay attention to IBIT today. Okay. Again, IBIT is the one that we have to really make sure that we keep an eye on right now. We're basically very, very close to main support here. We have not been able to get through 62, but we'll handle that all in 1 second. All right, so we got the ghost of the machine that's really gunning for the CME market gaps. All right, now, right now as it stands, there is a vacuum underneath Bitcoin. And those CME gaps remain open. We've said this before, 97,000, 92,000. Every gap did get filled since 2023. Now, when we were at 116,000, there was actually no need to be talking about this. We were actually thinking that we could actually gravitate away, further enough away. And being at 126,000, we should have been. We should have been further away. We shouldn't really even be talking about this now, but alas, markets are going to do what markets are going to do, and the volatility of markets is the beauty of markets. It's where we make all our money. Okay, if we didn't have volatility, I wouldn't even be talking to you today. I'd be, I don't know, doing something else. I have no idea what I'd be doing, but I'd be doing something else. Anyway, so every gap got filled since 2023. Now, I have said many times before, and I'll say it again, not all gaps get filled. That's just not true. But the majority of them do. So I would, if I had to take a percentage basis, I would think maybe 85% of all gaps get filled. Okay? Let's say that. All right? Now, history says that because there's a gravitational pull here, they're gonna be filled as well. So, like, you could look at the potential price action that we see, because we're looking to buy the blood in the streets, and we're seeing that we could come down to 92, potentially even 90,000 before we have the basically breakaway. So now let's get into the 2-hour chart and let's talk about what's going on there. Okay, this is our infamous 2-hour chart. Okay, so double bottom here, the most important level we got. Actually, this level, yeah, that's the most important level we got on this 2-hour chart right now. This is the next and most important level. Okay, why? Because we rebounded off of this double bottom. We came up, we made a top. We came down, we made a higher low. We had, again, a lower high. We drove down to this, another higher low. So that is basically the reversal point for this chart. Okay, now we can get into some other early warnings of that, and we're going to do that right now. Okay, so that is the most important line in the sand. Say 99,000 is the most important line in the sand for a short-term trader. Now, from this history lesson, right? We rebounded up to 104. I told you that there was resistance, at 106. All right, we made it up to like what, 107, 106, 670. We also popped here to the high at 107.5. That was a good sign at the time. However, guess what? We needed to hold this bottom, and we didn't. And we fell right down to 102.6. Terrific. Now, what's going on? Well, we now have a rebound, but we have a lower high. We still have a higher low here, but we broke through the shelf. I told you watch that shelf yesterday. Remember? I said that's where we could probably go to. That shelf is really important. If we break the shelf, we're potentially going back down to this level right here. Didn't quite reach it. But the warning signs are there. So now, look at the market structure. We got this low. All right, so we could actually take it from here. We got a high, we got a low, we got a lower high, we have a deeper low. Guess what? This is now the warning level. Okay, if that breaks, okay, we got this level here and this level. But really, if this level breaks, we're going to be pushing down towards the double bottom. Now, the only way we get reprieve, right now from this level is, let's see, we went down to like what, 101 or something like that. What the heck did we go down to? Where? Too much caffeine, man. It's hard to do. Right there. 108. Really? The only way that we get any reprieve right now is if we can close above 104. Like, if we can close above this top right here. Okay, 105, really. I would think it would be good if we close above like 104.8, but 105.4 is actually better, right? So right now we are basically in between those massive liquidity walls, and they're not moving, right? So now we have a plan, and like, if you want a front row seat, how we're going to handle this, join our pro group, and we will show you how to do that in a little bit. But right now, as it stands, okay, if I go back to my 2-hour chart, main support right now, 100,000, psychological and institutional defense line right now. Resistance, main resistance, 106, like 800, 107. If we break it, we could run to 108, 110. We're not right now. It's just a slow grind, okay? If 100,000 breaks, we're looking at liquidity pockets at the 97,000 level, and then the 92. Okay, so now we could look at Bitcoin just, completed a complete leverage flush. Now funding has started to normalize. Open interest has also cooled off. Price hasn't moved that much. And this is exactly what how Bitcoin behaves before it moves a lot. So it's actually pointing towards the lower level, but guess what? The obvious rarely happens, and the unexpected constantly occurs in markets. So we have to be on our toes. Okay? Now, the US government, the goons are back. The goons are back in Washington. So the shutdown is over. The macro pressure on that whole situation is basically buy the rumor, sell the fact. Risk assets are slightly stabilizing, but institutional inflows are still cautious. ETF flows are mixed, but there is a little bit of improvement. Okay, so this is really where we got to be looking at IBIT today. Okay, now, if we look at Bitcoin itself, we can look at this chart right here. The triple tap playbook, we call it. Okay, first bounce gives you a little bit of retail, gives retail a little bit of hope. The second, lots of pain. The third is actually the fuel for the break out upwards. Now, this play is in March. Okay, this happened in March. Okay, now what we're looking at right now is the same 50 EMA rejection. Could be the actual Bitcoin like fake out before the liftoff, but we gotta pay attention what happens if we get into those CME market gaps. Gotta do it. Okay, gotta have a game plan. So this marketplace itself is going to be a little bit of a difficult one. Okay, there's going to be a lot of trading. Actually, I think we got a live stream going on today, which is great. Welcome back, Justin, for that. So the IBIT chart itself right now, I would say, is not looking great. It's not looking good. I don't like that we're below, say, 60 right now. I would like to recover above 60. That's like a psychological round number if you want to look at it that way. And we need to get through really 64. Okay, and we haven't been through 64 since like I think October like 28th or something like that. So it's been a while since, so we got to pay attention. Don't forget, these guys are not our friends. Just because they're selling ETFs and they're selling people into Bitcoin, they don't care. They want to drive the price down. Now, of course, they'll tell their clientele, their whales that are in, like, don't panic about this. Okay. Yeah, they probably could even tell them the story. We're trying to drive it into the CME market caps to get cheaper so that we could get a better ROI on our fund. So don't panic about what we're doing. All right. Just, strap yourself in, put the seatbelt on, because hang tight, because it's going to be a bumpy ride. Now, we have to navigate it by ourselves, but IBIT does not look good right now. It lends us to think that we're going to be able to buy into the blood. Now, we said it before. This is what we're looking to do. If we look at wave C is unfolding into a very, very painful zone right now. Now, I'm going to get the Elliotticians. I'm going to get all the Elliotticians come in, and I welcome them to come in, because really, Elliott wave is, this is our view of the Elliott wave. It's open to interpretation. We think that we got this kind of right, but you could put 20 Elliotticians in 20 different rooms, given the same chart. You're going to have different positions of the Elliott wave. Okay, so that's for a fact. So this is our take. The weak hands will panic in this area, and already how it ends. It'll be the takeoff. Okay, but we got to buy the blood. Okay, we got to be looking into them. We have to have the courage in order to do it. All right, now, Bitcoin, the dip basically is the signal. And when you don't buy the breakouts in this thing right now. The breakouts are basically, there's a lot of bears up top, so they're looking for the false breaks to sell you so they can buy back cheaper. Okay, we haven't cleared. Once we clear like the 108, 109, we could say, look for another dip down, and then the breakout above those levels would probably be a pretty good breakout area. But right now, nah, got to stay tight. Like, this is basically the Bitcoin 1 week. We're looking at this. Every bull run had a brutal 20 to 30% pullback. I told you Bitcoin had a 30%, like 30% delta. I was hoping. Hope is not a strategy, Tom, but I was thinking that because it was behaving more like a high, an AI type stock, that the pullbacks wouldn't be as severe. Because as we know, institutional players they don't like big deltas. I mean, if you think about FOREX, maybe you get a 6% delta in FOREX. Okay, this thing's 30%. And a 6% drawdown or upward movement in FOREX is big. But, it's nothing in this cryptocurrency. It's still the Wild West. But right now we're back in that zone. So we can't confuse pain with a potential trend reversal. Now, we got to hang tight. We got to pick our points, because Bitcoin basically has declined after failing to recover above the 106. And it's currently trading below 104, which is still kind of bearish right now. We said that we think we can get into the CME market gaps, so we're not contradicting ourselves. We're thinking once we get into those CME market gaps, then we have a potential for the reversal to occur. And we got to be really cautious in there. So again, if you want to see front row ticket for free, get in our pro group, and I'll show you how to do it in a little bit. All right, now I'm going to take you over to X. And one of the reasons why it's so important to follow us on X, okay? I mean, we got great, I mean, we showed you yesterday, Tommy Lee, not the drummer, is actually reposting us, okay? So come on. You got to, pay attention to us on X. Make sure you tell all your friends about us on X. All right. We're trying to build a real huge community. We're getting there. We're getting there slowly but surely. All right. So let's talk about what's going on, the part that nobody's talking about. I'm going to take you over to the X post right now. Here's our post. The exchange stablecoin reserves are exploding. Now I'm going to blow this up so you can see it better. See how it looks like on the screen here. I can't get the whole thing in there. Damn it. But anyway, all right, we got a massive stablecoin reserves that are exploding right now. It's one of the biggest spikes that we've seen in several months. So what does it mean? It could mean a few things, but it could mean that, that's dry powder waiting, okay? That's positioning, that's preparation. Now, if you think about it, whales don't park billions in stable coins on exchanges just for the fun of it, right? They don't do it. There are one or two things that's happening. They're actually waiting for lower prices to scoop size aggressively, which is what we're thinking, or they're loading the chamber before they strike first and they run the prices higher. I think that they're basically, just waiting for the lower prices. That's my opinion. Either way, big money is preparing. And when big money prepares, price always follows. Now, here's what we call it. Like in my old institutional world, we called this latent flow. Capital has entered the system, but it has not been deployed yet. It's waiting. It's like a guy waiting to execute, his level in trading. He's sitting. He's sitting at, a liquidity zone. He's got his order in place. Of course, he doesn't know if he's going to get filled, but he's looking to get filled in that order, and that's exactly what's happening right now. So, capital has entered the system, has not been deployed. It's basically sitting at certain levels in order to be deployed. This kind of behavior comes right before one of two outcomes: a massive liquidity grab to the downside, or a high conviction for upside expansion. I'm thinking the first one. I'm thinking liquidity grab to the downside. Whales always load the gun before they pull the trigger. Now, I want to take you over to what's going on with like Glassnode. Like we have something up that it's really like one of the most for me, one of the most misunderstood charts going around today, because a lot of people are talking about the Glassnode long-term hodl line. Okay, I want to break that down for you. I'm going to take you over to that. I'm going to show it to you. Hang on one second. All right, we're looking at this chart. The first question, if you're not familiar with it, is what the heck does this thing mean? Well, it shows how much Bitcoin is being held by wallets that haven't moved coins for at least 1 year. When the line goes up, long-term holders are accumulating. When the line goes down, long-term holders are selling. They're distributing. Now, here's what we claim. Here's what we claim when we're looking at it, or what I claim. Because I've been looking at it and going, okay, well, how is it, you always have to be wary of like, it's different this time. But it is different this time because there's a lot more things happening right now than have ever happened. I mean, if you go back to this and you're looking at 2014 and you're looking at 2018 and you're looking at 2022, the marketplace is vastly different today than it was back then. And I'm going to explain why I'm saying it's different this time. And then I do believe it's actually different this time. Okay. Right now, the 1 plus year hodl line is breaking down from peak levels. Now, that's exactly where every previous cycle top was formed. 2013, the hodl line peaked, then dropped. 2017, it peaked, and then it dropped. 2021, it peaked, then it dropped. Each time, long-term holders took profits into strength, okay? So what's happening right now? Well, are long-term holders, are they selling? Yes, that's true. They are. But here's the part that I think everybody's missing out on. 2025 is nothing like 2013, 2017, or even 2021. Why? Well, you tell me. Think about it. ETFs exist today. They didn't exist in 2014, 2017, 2021, 2022. They didn't. Institutional flows exist. They didn't before. Supply dynamics have shifted post halving. Whales rotate between cold storage and exchanges. Always. Stablecoin reserves are surging. And right now, on-chain behavior is much more complex than it ever was. So what does it mean with the long-term holding? What does this distribution actually mean? Well, I think it could mean a few things. And leave your comments. Tell me what you think. I think that they're locking in profits. It's not bearish. It's completely normal. Late cycle behavior is starting, but cycles are longer now. They're not the same as they were. Institutional money expands and extends the cycles. Long-term holders, they're selling. What does it do? It creates liquidity for who? BlackRock, Fidelity, Vanguard. Right now, they're creating liquidity. So ETF funds, whales, they all want coins. And guess what? The long-term holders taking profits. Great. I'm thinking that a breakdown in the hodl line equals rotation, not collapse. I'm thinking it's distribution equaling like repositioning. So now if we combine it with the other data, stablecoin reserves exploding, whales moving funds into exchanges or onto exchanges, Bitcoin volatility is compressing right now, and we got a slight derivative reset, and suddenly the picture looks very, very different. It's not a cycle top. It's basically a transition point. Could we go lower? Absolutely. They want to push the price lower. I can't say it enough. The big boys, the IBITs, the BlackRock, of course, they want to push the price lower. You know, it's interesting. I was talking to my girl. She doesn't really pay attention too much to this, but she goes, I was reading a story that BlackRock saying that, Bitcoin's dropping. It looks like they want everybody to sell to them. I said, oh my goodness, that was a moment of genius. That's an excellent, deduction. Yes, yes, they want people to get out and give it to them. They want it. They want to buy. So really, I'm saying it's not a cycle top. It's a transition point. We're shifting from long-term holder-driven cycles to a market-driven price discovery phase. And you're going to typically see like increased volatility, which is what we're getting. You're going to see liquidity grabs, which is what we're getting. You're going to see shakeouts followed by a large trending move. We're not fully done with the shakeout yet. So the bottom line for me is that the bull market isn't ending. The market structure is starting to evolve. And this is the phase where pros position early while the retail panics late. Okay, so that's my take on it. Now, leave your comments below. Again, it's going to be a difficult period. If you want to, you want to see how we're doing it, like I said, get into the pro group. All right, let's move on over to good old Ethereum. Right now, Ethereum is trading around 3,004. Okay, so right, the key support's really 3,000, even 2,800 below that. That's the main support. That's the key level. But the minor level is support at 3,300 to 3,350, and we're coming into that zone right now. Now we got resistance, short-term resistance at 3,700 and 4,000, right? So we're seeing like right now, Ethereum, it's quiet whale accumulation. Ethereum is acting like a blue chip of altcoins, right? Tight ranges, stable structure, preparing for potential volatility break. Now, Ethereum always lags Bitcoin in consolidation phases. Then it outperforms on trend expansions. We're not seeing it right now. We got Bitcoin dominance that's still up there, but we know that Ethereum really is sitting in a make or break. Okay, Ethereum is sitting on like a 50 weekly 50 EMA. It's been there for quite a while. Here's the 50 EMA right there, weekly EMA. We're sitting on it. The level was resistance for over a year, and now it's being tested as support. And we lose this, and the momentum's going to die. We hold it, and we're going to send. That's just the way it goes. That's the way it goes, folks. It's showtime, folks. Whew. All right, let's move over to Bitcoin dominance. This bad boy, this thing just does not want to give up. Okay, it's sitting still at 60. All right, so what does that mean? We're not going to see anything unless we get below like 54. All right, that would be the start of it. All right, so right now, as it stands, Bitcoin dominance, it's all about Bitcoin. We got to pay attention to Bitcoin because Bitcoin's in the driver's seat. It's actually going to tell us what direction we're going in for sure because everything's going to follow. Everything's going to follow Bitcoin. But if we go over and we're talking about this, now everybody's talking about altcoin market. Like, when is it taking off? Well, we're not getting any takeoff until we get this thing to cool off, and then we get stability. We need stability. Now, if Bitcoin drops below 90, you could just basically the blood would be unbelievable in altcoins, okay? And that would be a flush out like we have never seen before. And of course, new people will come in to take the place of everybody that got crushed. But with the same hopes and dreams, but without the same knowledge. So you gotta make sure that you got some knowledge in trading, okay? And how's the saying go? Knowledge is power. No, knowledge is not power. Applied knowledge is power. So you got to know and you got to be able to apply it. So really, if we're looking at the altcoin market itself, we look at the total market cap here. The altcoin market cap is definitely not in a broad rally mode. It's really in a selection mode. So we had 1.17 billion of outflows last week. That's kind of risk reduction, but selective inflows into Solana and certain other AI names. Most small caps are flat or they're bleeding out. XRP's up a little bit. XRP's holding its own, but obviously this is not alt season. This is a pick your fighter season. Okay, trade strength only. Trade strength only. All right. Alts are following the same cycle they always did. They always chop before they fly. They're always boring before they explode. Each green box was the start of a new alt season. We're there again. We're entering the zone where alts could take off. We just got to be patient with it. All right. So how do you get into this pro trading group that I keep talking to you about? Well, it's really simple. The link is in our description. Click this link right here. You'll be taken over to our pro Telegram trading community. And really, it's completely free. We drop insane alpha trading opportunities daily. As a matter of fact, you get front row seats to Justin's actually be doing a live stream, I believe, today. We drop insane alpha trading opportunities daily. Breakout setups, long-term gems. We got you covered in there. However, if you want to go it alone, we offer two outstanding brokers. We offer WEX broker, low fees, fast execution. BTCC, low fees, fast execution. Look, WEX through our link is offering an incredible bonus. I believe it's no fees for life. BTCC is giving a $500 US dollar token giveaway. You got a small account? Well, make a decision. You want to boost up that account? Grab a BTCC account through our link. However, what I suggest is you click this link and you join us, where we can actually stack the stories, the trading profits, all the trials and tribulations together. That's what it's all about, man. That's what it's all about. All right. So what is the closing message for today? What is the key takeaway for today? Well, Bitcoin is definitely coiling. Ethereum is tightening up on us. We have major players that are playing around in the marketplace. Got to keep an eye on IBIT. Okay. Crypto quant is screaming a preparation. Glassnode is signaling rotation, not collapse, as we just said. So I believe it's a transition phase. And transition phases create the biggest opportunities. Make sure that you come on over to X. Follow us on X where we talk about Bitcoin, crypto all day, every day. So what do you got to do? Well, you got to seriously think about joining our pro group. What else you got to do? Well, you got to do your own research. As you know, I am not a financial advisor. I am a trader just like you. You got to trade with your head and not over it. And as a short-term trader, you got to enjoy the party, but dance near the door. I'll see you tomorrow. Cheers.